Hello and welcome back to another episode of the Mark Moss Show, where we talk always about the decentralized revolution, how the world is, of course, changing right before our very eyes, and always looking at it through the lens of politics, finance, and technology. And of course, that technology that's always changing the world, I like to think about is Bitcoin. And I have an old school Bitcoin guy here with me in studio today, Jeffrey Wernick. He's an investor, self-proclaimed anarcho-capitalist. He's been an investor, strategic advisor to Parler, co-founder of the Parallel Economy with Dan Bongino, and so much more. Super excited for this conversation, Jeff. Thanks so much for joining me.
Well, thank you for having me.
You know, I've been looking forward to this interview because, something that you've been focused on for a really long time is something that I'm super focused on. And that's sort of just building the world that we want. Like Socrates said, don't focus on fighting the old, just go build the new. And you've been sort of doing that, through Parler and Parallel Economy. I know we talked about, before we started recording, a little bit about Parler. We don't need to go back all through that, but it is pretty interesting, for those that don't know, maybe you can kind of just fill us in a little bit. You jumped in to kind of advise Parler, but then they drew a lot of heat and got canceled.
Yes.
Maybe just kind of run us through that experience.
Well, first I can say I predicted it would happen when I first invested in Parler, and maybe I should give a little background on how I even got to the point.
Yeah, that'd be great.
In 20, I basically lived my life as a very private person. In 2016, election night, I had a bunch of friends together. I had placed a bet that Trump would lose the popular vote, win the electoral vote, and so all the people on the other side of the bet, I hosted a dinner so that I thought that they could have a good opportunity to cry after the outcome they had hoped for didn't happen.
Yeah.
So after, as the dinner was wrapping up, I asked the question. I said, I'm asking a serious question. And the question I asked was, who lost tonight? So people said, oh, Jeff, don't rub it in. We know Hillary lost. I said, no. I said, I'm asking a more serious question. I said, today, free speech died. I said, all the platforms that describe themselves as free speech platforms will no longer embrace free speech. So
Was this in 2020 or 2016?
2016.
Okay.
So in 2019, several of the people who were at that dinner had told me,
but before we go back, what was it that happened in 2016 that you made that statement over?
because I felt that the people, that the Trump victory was something that many people thought was incredulous, and that what enabled the victory was his use of social media. And therefore the social media platforms, who could not contemplate that he would actually be president, would no longer embrace, the type of somewhat free speech absolutism that they had reasonably embraced prior to 2016. So I thought they would all get into what's now called the content moderation business.
Right. So because an anti-establishment person like Trump came and out of nowhere and rose to presidency, which was not in their plans, they realized that they had somehow lost control of the narrative. And so you're saying that you're like, well, they realized that, so they knew that they were going to have to regain control somehow, and that would be through censorship.
Correct.
Yeah.
Correct. So so in 2019. I had several people who were very well aware of my position, and the fact that also that I have a reputation for funding things that most people are not willing to put money into. At the same time, I had people approach me about funding Gab and funding Parler. So I met with Andrew Torba, and I met with John Mates. My judgment about Torba at the time described himself as a Bitcoin-loving libertarian, and John Mates just described himself as a libertarian. They all seem reasonably committed to free speech. I can't say I did extensive due diligence because I didn't, but at least from the limited due diligence I did, I saw that they were the only real, quote, free speech platforms out there. So I think I gave I had created one entity that gave Parler about $1.5 million, and I created another entity that gave Gab, I think, about $600,000. So Gab would have enough money to, as what they had represented to me, they wanted to hire engineers and who were reluctant to come on board because of its balance sheet, and also so they could get the servers to be independent. Parler had a different use of the money, and basically Gab just wanted my money. Parler wanted me as a mentor, so I basically gave each one of them one. Gab just wanted my money, so that's what they got. Parler wanted my mentorship, and my money, and so I got intimately involved in Parler. I was in a daily contact with the founder, usually multiple hours a day, and it became probably the biggest allocation of my time by far, during 2020. I was on the phone with the last conversation with Google. I was on the phone with the last two conversations with Amazon. I'm not surprised by the outcome. I had always insisted that once Parler scaled, everybody would attempt to cancel it. And I had been an advocate for building I wanted to decentralize Parler. I wanted to basically convert it into a DAO and a blockchain project, and not be on any big tech platform. I think that given the fact how successful Parler became, during 2020, it became the most downloaded app in the world. That sometimes people get complacent and their priorities change, and people have a different assessment of risk and probabilities. And I think maybe I was the only one, in Parler who believed that the future of Parler was as a web app and with its own infrastructure, and that with a web, I should say, a website, not an app, because I didn't think Parler would stay, on the App Store. So for me, I didn't bet on Parler based upon its ability to stay, in an App Store. I can
Right.
tell you, in my opinion, if you look at the evidence that is today, about how many of the people who've been indicted, and convicted, how many Parler accounts, how many were active on Parler accounts. I could tell you that I spoke with many people in the media, and I would ask this question. I said, how can Parler facilitate an insurrection, any type of movement? I said, one is most of the people, if you probably look at many of these people, if they had a Parler account, they were using a pseudonym. So I said, how can you find anyone on Parler with a pseudonym? Parler had a very poor search capacity. So you can't go and find it. Parler did not have groups. People who had used pseudonyms could not DM other people with pseudonyms. So how is anybody going to organize anything on Parler?
Right.
I said, nobody is organizing anything on Parler. It just explained to me, how is it going to happen? How
Right.
is somebody going to find a group of people and communicate with a group of people that they can't create a group? Okay, they can't DM each other. So how are they going to recognize each other and coordinate activities with each other? No, they're going to have to go to Signal, Telegram, other platforms that facilitate the making of groups and encrypted communications.
Yeah.
Parler didn't have those attributes. So why do you think Parler is any sort of threat? All Parler has is a whole bunch of people expressing their point of view, and they're expressing it, and hopefully a few people will read it, but there's no organizational capacity that's ever going to happen on Parler. So it was clear to me, that in my opinion, these are just people who bear. I have a very simple speculation on what happened.
Yeah.
Okay, a
Well, let's
couple
uh,
of
let's
days.
let's let's talk about that when we come back. I got to take a really quick break.
What I think happened is I learned this after the fact, but when we had meetings after, when Paula had meetings after it was deplatformed and was discussing whether there were anything that they could take legal actions against. So there were calls with an attorney that Rebecca Mercer hired, and we were all on the phone with calls and all discussing all the communications. And I learned in one of those calls that someone from Amazon made contact with John Mates, the founder of Parler, as John described in these calls, and basically this person from Amazon. This was like 2 or 3 days before Amazon annihilated Parler. They asked John Mates if Trump was coming onto Parler. So John, from what I recall, John said yes, Trump was coming onto Parler, and that he expected like 20, 25 million more, you know, uh, users, more accounts, which basically would have a little more than doubled the size of Parler to join Parler. So I think they were fishing. This is right after Trump got removed from every other platform. So in my opinion, and again, this is a speculation, the target was Trump. At
Right.
that point in time, they didn't want Trump to have another platform, and Parler was the most downloaded app in the world. They wanted to stop Trump, in my opinion, and so they wanted to make sure Trump did not have a voice. And the best place for him to have a voice would have been Parler, because Parler had the capacity for scaling, and I think that they wanted to prevent that.
Yeah.
So I don't
It's
think
not. It's
necessarily the fear was Parler. I think the fear was Trump being
yeah.
able to have a platform that large to continue
Yeah.
to express his opinions.
It's not a far-fetched assumption. We have video recording of Biden saying if Trump runs again, we're going to do everything we can to stop him. And now he has like 80 indictments, so we can see where that's headed. But I appreciate you setting that up for us. When for everybody not really tuned in, when that happened, and to the point of the story, then Amazon basically kicked it out. The App Store kicked it out. Amazon server shut it down. And that leads us back to the topic that I really wanted to talk about, which was, so in 2016, you saw Trump win in and you go, oh, shoot, this is the end of free speech. And you had written some articles and you had talked about how our system has a trust deficit. And
Yes.
there's distrust in media and partisan politics. And so I think this all ties in the way that I'm seeing it, because they need to control the narrative and they want us to trust them. But the internet has created a way where we can get all the information, and now it creates distrust. What were you talking about when you're talking about the system having a trust deficit?
Well, I think you have. I've argued for a long time that there's no such thing as a trusted third party. So, given the fact that I think that you have no such thing as a trusted third party, because to the extent that we delegate, anoint, quote, or legislate trusted third parties, then the interest of that trusted third party is to preserve its monopoly status as a quote a trusted third party. So, and they get that mostly by force, not by being transparent, in a way that would further make people trust. So for me, I think the only opportunity we have in building a society is with trustless technology and peer-to-peer relationships. I think that, and to the extent that if we are going to have gatekeepers, that there's choice, that people can choose their gatekeeper rather having those gatekeepers chosen for them. Anyone, power corrupts, and absolute power corrupts absolutely. So to the extent that once you have a gatekeeper, typically, like most people, when they have positions of authority, they get co-opted by some special interest, and they begin to represent that special interest. So to expect any person to remain neutral, okay, the only way to have neutrality is through competition, not regulation, is through choice, is giving people options. So the only way we'll have neutrality is decisions made voluntarily in the marketplace, not through coercion and force, which means that we have to not it means that we have to eliminate friction wherever exists. So we have to be able to create these platforms that eliminate friction. And I think as the more we eliminate friction, the more we will enhance trust. And obviously, those people who are in the business of mediating trust through them do not want to see, that model evolve, because that's a great threat to them, and they want to preserve, the perks of the privileges that they currently enjoy.
Right.
So, to the extent that they have to convince everyone, in the absence of a gatekeeper, there's chaos. To fear the absence of a gatekeeper, that the gatekeeper is the adult in the room, and that we're going to be in a Hobbesian state of war, man against man, woman against woman, person against person, in a constant state of war, and the only thing that prevents that are the gatekeepers. So that's how they have to demonize, anyone who challenges the gatekeeper model. Is they have to sell fear, and the consequences of their not being gatekeepers. And so I think that, I do not, and given the fact that we now have, greater access to information, it's easier for us to learn the number of ways why we can't trust and shouldn't trust the people who tell us we should trust them.
Right. Well, we have these trusted third parties. We have the central bank managing our money. Of course, we have no transparency, and they've proven time and time again we can't trust them. We have Facebook, trusted third party, but again, steals our data, mismanages it. We see that. We have Wells Fargo, and they're constantly putting fake bank accounts on there. So over and over and over, we see, to your point, these trusted third parties violate that trust. And so we find out over and over again, and it's easy if you just understand that human nature, to the point that you're making, is always going to want to take control, maintain that power, and then so thereby they start to violate that trust. You talked about how really like the way that the United States and the Constitution was set up was a way so that we didn't have to trust, or it prevented these big trusted third parties from being formed in sort of this decentralized, trustless manner where you had like these checks and balances.
Yes, and checks and balances that we, to a great extent, the Supreme Court, which was supposed to be the least dangerous branch, that might be the most dangerous branch, has eroded, most of our inalienable rights. You now have people going to the courts that will not overtly acknowledge that we even have and possess inalienable rights. And so, if we get people who challenge the concept that we don't have inalienable rights, then that's the most fundamental thing, in the Constitution, is our property rights and our inalienable rights. James Madison said we have rights in our property and property in our rights. So I think that's a very, very important concept, because our rights are also our property. So and we're told that there's a takings clause that says the only time a right can be taken away from us is if it serves some public utility and we're compensated for it. So most of the rights are being stripped from us, that are not stripped for any sense of public utility, and we're not getting compensated for it, because there's the forgetting of the concept that our rights are also our property. So they're inseparable, they're inviolable from us.
I mean, you hear the rhetoric all the time, specifically coming from one side of the aisle right now today, about packing the court. The Supreme Court has become activist judges, and we need to overrule them, or we need to make them irrelevant. And so those are things, I guess, that you're saying, that I'm seeing, where they're trying to really consolidate that power down. Both parties are really kind of like this uniparty, and so they can have absolute control. I mean, is that kind of what you're seeing?
Yes.
Yeah. And I guess, at the end of the day, there's just really no way to, at some point, we're always going to have to place faith or trust in something, in some sort of institution. And so I guess it's just a matter of limiting the amount of faith or trust that we have to give to that person. And you made a great quote. I wrote it down. You said, the only way to neutrality is through competition.
Yes.
And so let's say, for example, I love to think about email right now, because like with email, I own my email list, and I can choose to use which email client I want. So I could use MailChimp. A long time ago, I used MailChimp, and they said, oh, you're talking about cryptocurrencies. You can't be on MailChimp anymore. So I took my email list, and I just went to ActiveCampaign. Or I could leave, and I can go to Proton and have private email. But I own the list, and then I can choose my client that I want. I have to trust Proton Mail or Gmail, but if they violate my trust, because there's competition there, then I can move to the next platform. Is that sort of how you envision that?
Yes, that we got to eliminate. We got to figure out how to eliminate all barriers to entry, and then trust the process associated with eliminating all barriers to entry, where so all outcomes are market-based outcomes based upon people's voluntary choices. So that's better than any system that relies upon coercion. So I think the expectation from almost all the founders were that the government would be very, very limited, and almost all of them, even like Hamilton, who believed in the bank of the national bank, almost all of them believed in the concept that the government, that tyranny was unavoidable and inevitable, if you got government involved in money, that there should always be a separation of state and money. So if you once you corrupt money, you corrupt everything that passes through that process of the movement of money. And so the founders, the framers were very aware, having studied history, of the adverse consequences associated with the debasement of money and what usually caused people to debase money the same way we've debased money. It's usually when you decide you want to be, instead of a nation of sovereign individuals. So the United States started as a nation of sovereign individuals, then it became a sovereign nation of serfs, and then it became, an empire, filled with slaves. So I think that's the evolution, of the United States. It's currently an empire, and people are slaves to that empire. And that would not have been possible with a sound money regime. So it's required, as almost every war has required, the debasement of money. So if you look throughout history, what funded conquering other peoples was debasement of money. So that is what has enabled, the expansion of, the American empire. Is its debasement of money. And it's very simple. Just look what happened, to the purchasing power of money, since we abandoned any sort of linkage to gold in '71. And we haven't necessarily diminished business cycles. We've seen the purchasing power of people not really significantly improve since we untethered money from gold. An advisor to Paul Volcker, John Exter, he referred to the new regime of the fiat money regime as IOU nothings. And so I think that I've not seen a better description of our current monetary regime than central banks through banks issuing IOU nothings. So and that's also what finances the rent extraction business, because the more money you give the government, the more proactive the government can be in engaging in the subsidizing of businesses, and the higher return there is to lobbying, and the more profitable it is to organize people to be in the business of rent extraction, rather than productivity and creation. So there's a high return to extracting rent from Congress. And for many businesses, they find that's the best investment. The highest return on investment is not going out, hiring a bunch of really smart people and thinking about how you can innovate, is hiring a bunch of former politicians and other cronies and figuring out how you can manipulate the rules to be in your favor. And so if we've looked since we've been in this rent extraction, money debasement period, we see that we've had very low productivity growth. Some economists call it a productivity conundrum. I don't think it's much of a conundrum. I think we went from a reasonable level of free market capitalism into rejecting capitalism and embracing cronyism. And why should we expect cronyism would produce the same returns on individual initiative as capitalism?
Exactly. Yeah, I went and took almost a month and traveled Europe with my family this summer, about a month ago. Went through Italy and Greece, and in Italy, seeing what was built, thousands of years ago in Rome, and then we spent quite a bit of time in Florence, which is kind of the birthplace of the modern monetary system, and it also had the florin coin, which was the longest lasting gold coin in the world, almost 400 years without debasement. And it's what really kicked off the Renaissance, right? Going from the Dark Ages to the Renaissance. So having a coin that wasn't debased to the point that you're saying and was globally recognized led to massive flourishment of the entire world. And when I look at the buildings in Florence, you can just see they're so ornate, and the materials that they use and the size that they use and all these things. And I just thought, what put Florence on the map at that time was just textiles, nothing big and fancy, just textiles. But how could they spend that much money and detail and time and effort on these buildings. And it's like, well, they had a sound money system, right? And
Correct.
like today we build a bunch of boxes. Like here, like in California, it's like stand up, just pop ups, just boxes, boom, 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 and like that's the difference of like that fiat money system being debased. You mentioned earlier, like, separating money and state, right? That's sort of what the Fed tried to do. You sort of have this semi-quasi-independent agency that controls money, not the government. Sort of tried to do that, but of course they're debasing the money on their own. You think that was a sort of a ploy to get people off the backs of the government printing money?
I think unfortunately what had happened was, and I'm somebody who went to University of Chicago and got to know Milton Friedman and Frederick Hayek. That I think it was the bifurcation between the opinion of people like the monetarists and people like Hayek, who wrote a book called The Denationalization of Money. So Friedman had initially hoped that an independent Fed would preserve the purchasing power of money. That clearly did not happen. And later in his life, Friedman had speculated about there just being a computer with an algorithm that would determine, an automatic level of money being printed, so that there would be no human intervention or discretion, in the process. So, I mean, that's not a horrible description of Bitcoin. So,
And F.A. Hayek famously sort of foretold about Bitcoin in the 80s as well, with his no sound money until it's taken out of the hands of the government. But we also have that problem with trust, right? You had talked about the need for like a trust revolution. So
yes.
a way to facilitate greater transparency and accountability and all that. So what's this trust revolution that you see that we kind of need?
Well, I see really, my vision of like the future of how we organize economic activity is maybe people think it might be simplistic and stupid, but one of the major areas in finance that has not been adequately solved is the principal agent problem. So I think there's a pretty easy solution to the principal agent problem that ties into how also we reinforce trust in a society. So I view Bitcoin as base money. So Bitcoin has the best attributes for being base money. It's immutable. It's censorship resistant. It works like cash in the sense that it's pseudonymous. That people don't have to necessarily learn a lot more about each other. They just have to make sure that the exchange, that everybody's getting and receiving what they agree to get and receive.
And it's
So it's
permissionless.
permissionless.
Yeah.
So this is the world our founders had created. These are our unalienable rights. Okay, I don't see how anybody can really not think that they're unalienable rights. So now the second thing tied to now Bitcoin is now how we organize economic activity. Ronald Coase, another person I got to know at University of Chicago, he asked the question, why do firms exist? And I would go around as a student, I would ask people like Merton Miller and Gene Fama and Friedman and Stigler and Becker, can you give me your explanation on why firms exist? Firms exist because the SEC requires people to organize economic activity through a firm. Because if you go raise money, you have to have an entity, you have to have somebody that has some liability, you have to have somebody that then goes and raises money through some other, quote, trusted third party, a Wall Street firm. We don't need to do any of this stuff. We could tokenize all businesses. And let me give you an example. I spoke to somebody I knew who was a director who came to me and a producer of movies, and he came to me for money for movies. So I said, look, I don't understand why you need to raise money, okay? Let me give you an alternative way of how you can go about doing your project without raising money. You need people to contribute human capital, okay? So why don't you issue a whole bunch of tokens to everybody? Not everybody gets the same amount, but you determine what people. So if people really believe in your project, okay, really think it's going to be an economic success, the token represents a claim against the success of that project. Okay, so now everybody is an owner. Okay, so we create a real ownership society that people are allocating their human capital to activities on the margin that they believe is the most productive use of their human capital. It's not like I get a paycheck and I get a fixed income, so I don't care whether the activity's productive or non-productive. The incentive now is for me to only engage in activities that are productive. And given the fact that I'm an owner, I'm going to want to make sure that the rules of this thing that I'm part owner of, this project, that rules are established that are completely transparent, and to make sure that my claim is respected pari passu to everyone else's claim. So now, to the extent, then you ask the question is, well, some people need their paycheck to live off of. But if I have a token, let's say I'm working on, the Mission Impossible movie, okay, and I have a job and I'm getting tokens. Well, all you need to do is list all these tokens on exchanges, and then to the extent that I need to pay my rent or pay my mortgage or go on a vacation, then I can tell people, gee, I'm on this, do you want a piece of the Mission Impossible movie? Do you want to be a token holder and have a claim? And do you want to bet on the success of the Mission Impossible movie? Here, I'll monetize my token. I bet a lot of people for successful projects. Think about how much that would democratize finance. If now everybody was compensated in tokens, and every token that people earned if they needed to monetize it, they could monetize it in exchange to anyone who wanted to be a passive investor in that project. And now every economic activity that occurred, people can participate in every single economic activity, and all economic activity constantly has a market price that everybody can observe that market price. So we now have solved the principal agent problem. We've now provided a facility for people who are in bad projects that they're now going to learn quickly the project is bad. So they can then say, I'm going to no longer allocate my human capital to this project because it's a lousy project and I'm going to get no return from it. So I'm now going to allocate my human capital somewhere else that might be more productive. Yeah. So on a real-time basis, everything is being constantly repriced, and the allocation of capital, including our own personal capital and tangible capital, we're constantly pricing at market prices in the place where we'll get the greatest value, where we think we'll get the greatest return from. And while there might be disagreement on the best strategy inside a firm, there won't be any conflict of interest because everybody's interests are aligned because the class of tokens they have are all pari passu. So the SEC gets in the way of that.
It's the SEC.
We can create a completely think about like even Uber, okay? The Uber drivers who helped make Uber come from, a very small project to, a multi-billion-dollar project. They got poorer, okay, as Uber grew. So they were the ones initially contributing their proof of work. They were busy driving cars, getting good ratings, keeping their car clean, and along the way, the amount of income they got. And why does this happen? Because while Uber was growing in value, it wasn't generating cash flow. So the owners of the cash flow, they don't want to be diluted. So if the initial Uber drivers were issued tokens, then they could have shared significantly in the upside. And if they needed somebody to live off of, they could have monetized their tokens. And I bet you a lot of Uber passengers would have liked to have had Uber tokens. So as they're using a platform, they could be a part owner of the platform that they find a lot of utility in Uber. Who prevented this from happening? The SEC. Is there good reason for it? No, it's just to promote cronyism and control over the economy. So I think these are easy problems to solve. If people can really understand the framework of what our nation was founded upon, which was decentralization, and that people have to figure out how to create a reputation of trust on their own with interacting with peers. Yeah. So an example I give in some of the talks I give is like thinking about when you play. I would ask my friends in school, I played on the basketball team. I also played in the park. I said, which do you have more fun in? Everybody said the park. I said, I can tell you why. The park, let me tell you how the park works. When we go on and we play in the park, is there any captain of a team? No, there's no captain. We choose people because we choose people we think we're going to win the game with. Then when we get on the court, tell me who's the authority figure on the court. We don't have a coach. We don't have a referee. Okay. Yeah, what do we do?
It's all cooperation.
Yeah, it's all system of cooperation. If somebody is just a hacker, okay, nobody wants to play with them. If somebody's a chucker, nobody wants them on the team. The market works.
Yeah.
This evolves without any controlling authority whatsoever.
Yeah.
Okay. And while I was at basketball games where there were fights at the basketball games, I can tell you where I grew up, there was never a fight on the court. Yes, people would argue a few minutes, you'd stop, you fouled me, you didn't foul me. But if anyone was really abusing the privileges of calling fouls, nobody wanted to play with them.
They'd
The
be kicked out.
marketplace worked.
Yeah.
The marketplace works.
Yeah. Well, it's certainly a great rundown. I appreciate you doing that. The highlight that I pull out of that is that we have everything we need to run this system properly if the government would just get out of the way. So to your point, the SEC in supposedly in trying to protect consumers, really all they do is harm consumers. So I'm certainly all for that. As we're talking about all this trust being lost in systems, the oldest trustless system has been gold for 5,000 years. I like to get my gold from a place that I can trust, though. So I use Universal Coin and Bullion. I trust them because the president, Mike Fulgens, wrote the consumer alert on gold coins for the Texas Attorney General. I've worked with them directly, and they have great prices. Mike has a very special offer for our listeners. You can get a 1-ounce gold American Eagle coin, which is the most popular gold bullion coin in the world, at his dealer cost, and even get free shipping. He'll even send you his 30-page national award-winning gold guide, absolutely free if you just mention me, Mark Moss. It all ships for free too. Give them a call, 1-800-UCB-GOLD. Again, 1-800-UCB-GOLD, or you can go online to universalcoin.com/Mark Moss. Again, universalcoin.com/Mark Moss. If you're just tuning in, you're listening to The Mark Moss Show. I've been joined with Jeffrey Wernick. We've been talking about the loss of trust in our institutions and how we can restore that. Hopefully that was insightful for you. That's what we got so much. That's what we got for today. Thanks so much for listening. Until next time.